Welcome to the Deep Dive, where we try to cut through the noise and get you informed fast. Today, we're looking at what feels like a really significant financial shift. It involves traditional institutions really embracing these cutting-edge digital assets.
Yeah, it's a big move.
Specifically, we're diving into a brand new partnership between Metallicus, who are, big in blockchain, and Velera's new digital asset lab.
That's right. The news just dropped August 20th, 2025.
Exactly. Hot off the press. And our mission today is really to unpack what this actually means for credit unions, for digital finance generally, and maybe even for you listening.
It's fascinating, isn't it, seeing these established players not just watching, but actively building bridges to this decentralized world.
It really is. And I think the big question for a lot of traditional places like credit unions has always been, well, how do we actually get involved with digital assets? How do we use this potential without, massive risk or losing sight of our core mission?
That's the million-dollar question, or maybe the multi-billion-dollar question now.
Probably. And this Metallicus-Velera partnership seems to offer a concrete answer, starting with this digital asset lab. So, okay, let's get right into the details. What's the actual announcement?
Okay, so the core news is Metallicus, they're known as a leader in blockchain tech for financial institutions. Plus, they're the main developer behind Metal blockchain. They've officially partnered up with Velera.
And Velera, just to remind everyone.
Right. Velera is the country's leading payments CUSO. That's a credit union service organization. And they're a big provider of integrated financial tech solutions. But the key detail, the really important bit, is that Metallicus is the first platform partner selected for Velera's brand new digital asset lab.
Okay, digital asset lab for credit unions. That phrase alone makes you lean in, doesn't it? What's its actual purpose? Is it just like a think tank, or is it more practical?
Oh, it's definitely designed to be practical, very hands-on. The core purpose is straightforward. Help credit unions take a leading position in stablecoins and other digital assets.
Lead, not just participate. That's ambitious.
It is. And connecting that to the bigger picture, yes, it's about collaboration and learning, but maybe more importantly, it's about building the actual infrastructure and forging the partnerships credit unions will need to, explore stablecoins and digital assets properly and effectively.
Okay, so how do they plan to do that? What kind of infrastructure are we talking about here? Is it just software or?
It's a mix. The lab uses a few approaches together. Industry engagement, education, which is key strategic partnerships like this one with Metallicus, and pilot programs. And this includes Velera setting up joint ventures to tackle really specific technical challenges. Things like distributed ledger infrastructure.
The underlying tech, basically.
Exactly, the foundation.
Yep.
Also, blockchain networks themselves, making sure different systems can talk to each other, that's interoperability, and crucially, core banking integrations.
So making it work with the accounts people already have.
Precisely. So digital assets aren't just some separate thing. They can work seamlessly with existing credit union systems. The goal is always to evaluate what's out there, assess it, and then develop solutions tailored for credit unions.
Right, so it sounds like a controlled environment, a safe space for innovation. I think John Ainsworth, who's the general manager at Metallicus, actually called it a secure, low-risk environment for testing.
That's the idea.
But, this space moves so fast. Even in a lab or a sandbox, what are some of the risks credit unions still need to think about?
That's a really fair point. The lab definitely aims to de-risk things, but yeah, credit unions still face hurdles. There's the ever-changing regulatory landscape, which is huge. Plus, robust cybersecurity is non-negotiable. And managing the reputation side of adopting new, sometimes controversial tech, what the lab does is give them a structured way to navigate this. It lets them, as Ainsworth put it, experiment with programmable money, streamline operations, and explore new opportunities, all within that framework. It helps minimize that steep learning curve and hopefully mitigate some unknown risks.
Programmable money. Can you unpack that just a bit? What does that actually enable?
Sure. Think of it as digital currency with built-in rules. It can automatically execute instructions if certain conditions are met. So maybe a payment only goes through once a delivery is confirmed, or funds automatically split between accounts based on income. It really opens up possibilities beyond just sending money.
Okay, that makes sense. It's about making money smarter, not just faster.
Exactly.
So the lab helps de-risk getting into this new area. Let's hear from the partners themselves. Marshall Hayner, he's the co-founder and CEO of Metallicus, called this a significant step. What's their angle, their vision here?
Well, Hayner was quite clear. He said their goal is delivering safe, scalable, and compliant blockchain-powered solutions for credit unions nationwide. It's very focused. He links it directly to advancing the cooperative movement and basically equipping credit unions so they can lead in the next era of digital finance.
Bringing their tech expertise to that specific cooperative model.
Right, making sure those institutions aren't left behind but are actually at the forefront.
And what about Velera? Their VP of Innovation, Vladimir Jovanovic, has some strong views on stablecoins, calling them a potential pivotal force.
He does. His perspective is that stablecoins combine the speed of digital payments with the stability of traditional currency. And because of that blend, they're emerging to be a potentially pivotal force in global finance.
Beyond just speed and stability, though, thinking about the listener, what could that actually change day to day? Are we talking easier microtransactions, maybe automated bill payments, totally new ways of handling digital lending?
That's exactly the kind of potential they're exploring. It's not just faster Venmo, right? Imagine, like you said, automated savings allocations, or truly seamless, instant international payments without the usual delays and fees, or even new lending models based on digital collateral. The lab is looking at how credit unions can actually offer these programmable experiences to their members.
So it could really change how we interact with our money.
Potentially, yes, that's the promise.
But pivotal force is strong language. We've seen plenty of turbulence with digital assets, regulatory questions. What are the big hurdles stablecoins still need to clear to reach that status? And how does Velera's lab approach help with that?
Yeah, you absolutely have to acknowledge the hurdles. Regulatory clarity is probably number one. Governments worldwide are still figuring this out. Consumer protection is vital too, and preventing illicit use. Velera's lab approach helps here because it allows for that controlled testing and learning. Credit unions can figure out best practices, generate data, maybe even help inform the development of sensible standards, all before going fully live on a massive scale. Jovanovic stressed this. He said it's vital for credit unions to understand their roles and responsibilities with these assets.
It's not just about chasing the new shiny object.
Not at all. It's about meeting member needs, yes, but also upholding those cooperative principles and helping to actively shape the future of digital finance, not just react to it. It's about staying relevant and central to their members' financial lives.
Okay, that makes sense. Shifting gears slightly to the practical side, who gets to play in this lab first? Is it open to any credit union?
Not immediately, no. The initial access is for participants in Velera's existing Innovation Alliance.
Ah, okay. So a group that's already engaged.
Exactly. It's a group that already brings together platform partners like Metallicus now and credit unions. So there's already a collaborative ecosystem there ready to go.
And what are they tackling first? What's the immediate focus?
They're starting quite focused, actually. The initial R&D priorities are specifically stablecoins and tokenized deposits.
Tokenized deposits. Meaning representing traditional deposits on a blockchain.
Essentially, yes. Exploring how that might work, the benefits, the challenges. So they're not trying to boil the ocean, starting with concrete applications.
Smart. And what are the actual steps? How do they move from R&D to something tangible?
The plan is to launch proofs of concept puckies and pilot programs pretty quickly. These will be used to actually test specific stablecoin initiatives, gather feedback from different groups, see what works, what doesn't.
Real-world testing, basically.
Yes. The ultimate goal isn't just research papers. It's to deliver actual tools and products that help each credit union move forward on its own stablecoin journey, whatever stage they're at.
Gotcha. And are there specific areas within stablecoins they'll explore first?
They've mentioned a few concrete areas. Analyzing the U.S. stablecoin market specifically, looking at cross-border payment opportunities, which is a huge potential use case, and even exploring roles within the traditional shared branching network.
Shared branching, wow, merging old and new. How might that work?
Well, potentially enabling new kinds of experiences or achieving much faster settlement between institutions when a member uses a shared branch. It's about seeing if this tech can improve even long-established services.
That's really interesting, taking something foundational like shared branching and seeing if you can enhance it with this tech. So wrapping up the core idea here, this partnership, this lab, it's fundamentally about empowering credit unions, these traditional member-focused institutions, to innovate.
Yes, specifically in digital finance, stablecoins, tokenized assets.
But doing it in a way that's secure, structured, de-risked. It's not about abandoning their roots, but building on them.
Absolutely. It's a proactive strategic move, trying to embrace the future while focusing on stability and real utility, which is frankly crucial if they want to stay relevant.
Especially as member expectations for digital just keep rising, right? You think about the potential impacts: faster payments, maybe smarter money management tools, entirely new services from your local credit union.
The possibilities are significant.
It really leaves you with a big question, doesn't it? For you, the listener, how might the widespread adoption of stablecoins, potentially accelerated by initiatives just like this Velera Digital Asset Lab, fundamentally change your everyday financial life? From how you pay for coffee to how you plan your savings. Something to think about. That's all the time we have for this deep dive. Thanks for joining us.